What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. Today, we're going to be talking about the electric vehicle industry. We're going to keep it all the way real. I know you guys know I'm bullish on NIO. I'm invested in NIO, but we're going to be pretty objective in how we tell today's stories today. What's happening right now, say this all the time, it's not just about one company, it's about the entire EV ecosystem's evolution. Let's start with the numbers that matter. NIO delivered 114,000 vehicles in the first half of 2025. That's a 30.6% year-over-year increase. Sounds decent, right? But here's a reality check. With their annual target of 444,000 vehicles, they've only hit 26% completion. That means that they're going to need a monthly delivery target of 55,000 vehicles in order to make their goal. But here's what's really interesting, and this is where market psychology becomes kind of fascinating. William Li, the founder and CEO, has repeatedly said that NIO plans to hit profitability by Q4 2025. He even said, and I quote, "If we fail to make a profit in the fourth quarter, its significance will be completely different from not making a profit in the past few years." That's not just corporate speak. That's a CEO putting his credibility on the line in front of the entire world. Now let's talk about something that flew under the radar but could be absolutely game-changing. Regulatory documents just revealed that NIO's third generation ES8 will use the same 102 kilowatt-hour battery pack as the flagship ET9 sedan. This isn't just a parts sharing strategy, it's potentially revolutionary. Think about it, the ES8 will get 635 kilometers of CLTC range with this battery pack. That's up from 465 kilometers with the current battery pack. But here's the kicker, they might standardize this as the battery without increasing the current price. That's a 36% range increase at the same price point. The battery weighs 545 kilograms with an energy density of 187 watts per kilogram and is supplied by CATL. What's interesting is that NIO is clearly moving towards standardization across their premium lineup. This could dramatically reduce manufacturing complexity and cost while improving the customer value proposition. But what's really interesting here is the Onvo L90, and folks, this could be the most important product in NIO's lineup just yet. Let me paint the picture of what's at stake with this one. Again, the L90 launched with pre-orders on July 10th, starting at 279,900 Ren, and that's the price for the full vehicle. If you want the battery rental, it's around 194,000 Ren. Battery as a service puts it at around 200,000 Ren. Under 200,000 Ren, that's around 27,000 for a luxury 3-row SUV. So let's put this into perspective, because it's 130,000 Ren cheaper than the Ledao L9 at 190,000 Ren. This isn't just competitive pricing. Everybody's talking about this across all the news outlets. It's disruptive pricing. But here's where it really gets interesting from a business strategy perspective. The Onvo brand has moved only 32,000 units in the first 6 months of 2025. Their flagship L60 peaked at 6,400 units in their first month. And so for NIO to hit their profitability target, Onvo needs to contribute to more than 50% of the sales. With the L60 maxing out at 6,400 units, the L90 needs to do 20,000 units monthly. That's not just ambitious. That's a moonshot. The timing couldn't be more brutal. The L90 is launching into this hyper competitive era of pure electric SUVs. On one side, you've got Xiaomi's YU7 with 289,000 orders in the first hour, starting at 253,500 Ren. On the other hand, there's Li Auto's i8 launching on July 29th, targeting the high end with advanced autonomous driving features. But here's the part that keeps me up all night as an investor. Leap Motor just launched their new C11 that's just over 149,000 Ren. That's 44,000 Ren cheaper than the L90's battery as a service option. The race to the bottom is real in the Chinese EV market, and clearly it's happening fast. Now, NIO learned from the Onvo L60's rocky launch. Back then they had production capacity issues, long delivery times, and battery swap station shortages. Shen Fei took over Onvo in April after his predecessor had resigned from the firm for missing targets, and he promised to avoid these mistakes. The L90 has cars in store before the pre-sales launch, and they're promising August 1st delivery. That's a much tighter execution timeline than the Onvo L90 was. But here's the reality: in Beijing, test drives won't be available until July 20th, and national test drives begin on July 23rd. In a market where impulse purchases drive sales, that's a severe handicap. Let's talk about the elephant in the room as well: profitability. William Li claims that the Onvo L90 still has profits even with it being around 194,000 rand. But industry analysts are skeptical because when you're selling premium SUV for under 27,000 US dollars with battery rental, the margins are razor thin. Saving grace might be their component standardization strategy. William Li mentioned that Onvo seats and drives can be used across vehicles in NIO's ecosystem. That's smart manufacturing, but it's also a necessity at these price points. Here's what's really fascinating from a market dynamics perspective. NIO is essentially cannibalizing the premium EV space to compete with mass market vehicles. They're taking luxury SUV technology and selling it at mainstream price points. That can be either brilliant or devastating. It's all going to depend on execution. So the battery swapping network becomes crucial here. Shenzhen promised to ensure that 85 kilowatt hour batteries are in stock at swapping stations. If they nail the convenience factor while maintaining low prices, they might be able to lock in an extreme competitive advantage. So where does this leave us? NIO's making a massive bet that they can achieve profitability through extremely razor thin margins. I can't speak today. The L90 needs to hit 20,000 plus units monthly, and that's higher than most luxury brands achieve with their flagship models. The technology standardization across their lineup, it's a smart strategy, but the pricing pressure is real. We're watching a company that's essentially betting everything on Q4 2025. As a NIO bull, I'm cautiously optimistic about the technology integration and the market positioning. But as a long-term investor, I'm watching those monthly delivery numbers very carefully. The next few quarters will determine whether NIO emerges as a mass market leader or crumbles under the pressure of aggressive pricing in the market. That's all for today's episode of the Courtside Financial Podcast. I really do hope that you guys found this useful, valuable, insightful, at the very least entertaining. If you found it to be any of those things, make sure you hit the subscribe button, click the notification bell icon, leave a comment down below. And like the video if I haven't said that already. All your engagement really does go a long way in helping out the channel. See you in the next episode. Owie signing off. Goodbye.